If you've ever taken your first pension withdrawal, clicked withdraw and seen tax taken immediately, even though you're under the allowance, you are not alone. And here's the part that catches people out. The moment you click withdraw, the HMRC system triggers an automatic assumption. And that can cost you hundreds instantly. I've seen real cases like this, £500 withdrawn, £100 gone in tax. No job, no other income. So what's going on? It comes down to something called the month one basis. And today I'm going to show you exactly what it is, why it happens, how to fix it, and how to stop it from happening again. Hello, it's Angie, and this is UK Money Wisdom. With over 25 years in accounting across private business and public finance, I explain how the UK system really works. Simply, clearly and safely. Let's get into this right away. Most people assume this. If I'm under the personal allowance, I won't pay tax. And that sounds logical, but it's not how the system works at the point of withdrawal. Because at that exact moment, HMRC does not know your full annual income. So instead of waiting, the system guesses, and it uses a temporary method called month one basis. Look at this table. This is the key idea. The system treats your withdrawal as if it happens every month. Not once like it did, not occasionally, but every month. So instead of looking at your real yearly income, it builds a fictional annual income and taxes you based on that. Let's look at what actually happens and walk through a real-world example. In this table, you click withdraw, HMRC sees unknown income. No full year data available, so the system applies emergency style code. And it applies a month one basis, so tax is deducted immediately. Look at HMRC's assumption engine here. The system is not checking your real income, it is projecting. It assumes if you took £500 now, you're going to take £500 every month. And that becomes £6,000 per year in HMRC's eyes. And depending on tax code, it may deduct tax straight away, even if no tax is actually due. Okay, let's compare that with reality and show the true tax position. Here's what matters. Your total yearly income, not the individual withdrawal. In this example, income is £12,564. Now, we know your personal allowance is £12,570, and that's frozen. So tax due will be nothing, of course. But here's the problem. Under month one basis, the system does not see this, so it may still take tax up front, even though none is due. As I keep pointing out, structure really matters. And let's look at a smarter structure here, shall we? With Sarah, who has a mixed income. of state pension, private pension, and an ISA withdrawal. And here's the tax position. The total taxable income of £14,547 less her personal allowance gives taxable portion of £1,977, and tax on that amount will be £395 approximately at 20%. You see, Sarah uses an ISA plus pension together, and this does two things. It reduces her taxable income and it controls tax exposure, and the result is lower tax overall. The key message you see here is it's not just how much you withdraw, it's where you withdraw from. So let's move on to how to fix it. Here's the step-by-step reclaim process. Step 1, please go to gov.uk, and step 2, search Claim Tax Back Pension. And step 3, select the correct form, and I show you the correct form you might need in this table. Now in step 4, complete the basic details, and in step 5, submit your claim. Now the timing, refunds usually processed within 2 to 6 weeks, but please don't count on that because many people have been waiting a lot longer. There is a cost of waiting, I'm afraid. If you don't reclaim, HMRC will correct it automatically, but usually not until the end of the tax year. And that means your money is gone for months. So your cash flow is reduced and your control is lost. The real impact of this is £500 withdrawal, £100 tax deducted, and that £100 could be tied up for months. If you've had tax taken from your pension, comment your tax code below and I'll help explain exactly what it means. Now, have you heard of the small pots rule? Because you may have heard of it. It's under £10,000, and this table shows you. It does not avoid month 1 basis. It can still trigger emergency tax or temporary overtax. But small pots can help simplify access. They just do not remove the tax system behaviour. Here is my technical and compliance check. And of course my disclaimer. If you found this useful, please subscribe and like this video to be sure of getting more of my videos, and do share with someone who could well use this information. I'm Angie and this is UK Money Wisdom. Bye for now. I'll see you all again very soon.